let me turn over now to my other colleague, Des Sobel. Des is our Deputy Chief Economist at FCC. And Des, we're going to be kind of diving in together across a few of these sectors of the agri-food supply chain. And I feel like asking you the same question. So we're going to start off with grains and oilseeds, and I feel like asking you the same question that I asked Christian, which is, if I put you on the spot, one thing that you think we have to pay absolute 100% attention to in 2025?
So it's a great question. I'm going to say prices. And so there's a lot of factors that go into determining what's happening with the current price, but also what's going to happen with the price over the rest of the year. And so I know we've talked about tariffs. We could probably spend the entire hour speaking about tariffs. They have a huge impact. They will have a huge impact if they're implemented, but we also need to focus on the market fundamentals. So that's what I'm going to focus on now, is mostly those fundamentals. So Canada operates in a global market. So I want to look at global supply and demand. And so what we're seeing globally right now is soybeans and corn, there's a lot of supply. And so we're coming into the year, a lot of supply of these crops. And as Christian mentioned about the Canadian economy slowing down, we're also seeing that slow down in the global economy. So that slowing down of a global economy is going to reduce demand. So all of that's going to continue to weigh on commodity prices this year. The one thing within Canada that we really want to look at as well is canola. And so China has launched an anti-dumping probe against Canadian canola. So, it hasn't been implemented yet. We'll see how that unfolds this year. So as we head into this growing season, last year we didn't have a great year for canola. It wasn't a great growing season. We had good precipitation early in the year, but the summer was really dry. So production came in lower than expected, and it was about 7% lower year over year. So we're seeing strong export demand, and we're also expected to see record crush demand within Canada. So if you look at exports, and so this is really interesting. So we have an export target of about 7.5 million tons. And we're currently about 10 weeks ahead of schedule. So we're seeing really, really strong demand for canola exports. And what the interesting part of this is, over 75% of those exports are going to China. So China is stockpiling canola in advance of what might happen later in this year. So given the lower production last year, given really strong export demand, as well as we're going to see record canola crush demand within Canada, we only need to export about another 2 to 3 million tons to actually meet that export target. The one thing we're looking at, so with that tight supply, as you can see on the screen now, we're looking at the stocks to use ratio for canola. So there's a lot happening in this figure, but what you really want to look at is a lower number means a tighter supply. So with a tighter supply, you would translate that into a stronger price. You can see for this year, 24-25, our price is actually a little bit lower than what we would expect because there's a lot of uncertainty in the market. What's happening with China, if they restrict imports from Canadian canola, that's being priced in. So we're actually seeing a canola price that's a little below what our expectations would be.
Yeah, I'm glad you bring up the topic of stocks to use ratio, because I'm often asked, so how do you form your expectations about prices in the next year and so forth? And really that's the information that we mostly use, right? Because the stocks to use ratio kind of summarizes all of the information about the balance between supply and demand, because that's the projected year-end stocks relative to everything that's going to be used throughout the year. So that's for us is one of the critical drivers of our price forecast. And I'm going to say that today we're not going to necessarily bring you a lot of those numbers in terms of forecasts, but we're mostly going to give you the trends. And the forecasts, the specific price forecasts, are going to be made available on our website throughout the rest of this month, as well as the month of February. We're going to be releasing week to week, the outlook of different sectors, and that will include a lot of the different information with regards to price forecasts and price projections. And that's all going to be available on the website at fcc.ca/economics. So just turning our attention now to two different other commodities here, corn and soybeans. Let's just try to think again as supply trends, demand trends.
Yeah. So I talked about global supply and demand right now, for corn and soybeans. But what we want to watch for the remainder of this year is really weather. And so we look at Argentina, we look at Brazil. What's the weather in those regions? Because they are major producers and exporters of both those commodities. So we're watching that. And as well, we're watching what's happening with China. So last time Trump was president, there was tariffs that were put on, and China actually diverted soybean imports away from the U.S. and to Brazil. They didn't come back to the U.S., so they're still importing a lot from Brazil. And actually, what we've seen this week is China has started to reduce some of its imports from Brazil because of some phytosanitary concerns. So we're watching what happens there, because if China does go back to the U.S., that would actually support soybean prices within the U.S., and that is a reference price for Canadian commodities all across for all commodities. And as well, wheat, we want to look at that as well, because we are seeing large supplies in both Canada and the U.S., and globally we're seeing demand exceeding supply. So that's going to support wheat prices throughout the year. So with all that being said, commodity prices have softened this year coming into the year, but what's really benefiting Canadian producers is that low Canadian dollar that Christian and NJP had talked about. So that lower Canadian dollar will actually help boost. We get an exchange rate premium. That's going to help support revenues this year. And lastly, I just want to touch on the pulse sector, because there's been some import policies that India had because they had high food inflation and limited production, that these tariffs were removed temporarily. We'll see what happens this year. As food inflation in India has come down, we'll watch what happens with their production. If things are looking good there, they might actually put these tariffs back in place for the pulse sector. So we are watching that as well for sure.
Yeah, just quickly, we're going to go back to corn and soybeans. If you look at the ratio of soy prices to corn prices, we're currently around 2.2, and then the average historically, or last 5 years for sure, has been around 2.5, which basically kind of sends a signal that the markets are expecting, or send the signal of more acres, right, of corn, right? Because that ratio of soy to corn is lower than the average. So the markets are really, because lowest in the last 5 years. So markets are really expecting, or kind of sending the signal that we need a bit more corn. And we've seen the review of the USDA yields as well a couple of weeks ago, right? With kind of a bit of a surprise. Anyway, I think the extent of the revision was a little bit of a surprise. Lower yields for this past year, which kind of supporting corn and soy prices now. And you mentioned the exchange rate, obviously a big deal when you think of the loonie, right? It kind of provides a little bit of a boost in our ability to export, or competitive in export markets. We can also think about inputs, because I do think that the loonie has an impact on inputs. So what can we say about inputs?
Yeah, so we've talked about the revenue side, prices, revenue. Definitely inputs are an area that producers want to focus in. If I think about fertilizer, so fertilizer is one of the main inputs, and overall fertilizer prices are trending lower, except for phosphate. And so there's a global shortage right now of phosphate, so that's still supporting the phosphate price. But for fertilizer overall, nitrogen and potash, we're seeing those prices ease this year, which should help profitability. And the one thing I want to highlight, and it's shown on the screen here, is when you look at fertilizer affordability, and this is an index, and what this is designed to show is the cost of fertilizer relative to the price of the crop. And so looking at this, a lower ratio is better. So we're actually seeing that trend lower. So that means that fertilizer is becoming more affordable, and which is good news. That's going to support profitability. So throughout this year, we'll keep watching this, seeing how the weather unfolds. But at the end of the day, if you look at the revenue side and the expense side, you'll see on the screen coming up now in a couple seconds, our margin estimates. So we do have margin estimates for eastern and west, so a canola wheat rotation and a corn soybean rotation. And what you can see here is that into this crop here, we're looking at things improving. And so, in the west last year, things weren't great. There were some losses there. In the east, things are still doing really well. Good returns, not near the 5-year average, approaching it, but not there yet. But keep in mind, the 5-year average does include some really, really strong commodity prices that help support the sector and really rebuild those balance sheets.
Yeah, and I always find it interesting when I look at our margins that you see up on the screen, that it's really about the trend, because a lot of people could actually focus on the numbers and the fine, but I mean, those numbers are based on some assumptions that you would say are specific to a certain size of business. There are before land costs as well, so you have to add that cost if you're renting land and so forth. But the bottom line gives you an idea of the trend. And to your point, Des, I mean, it's been because of weather as well. It's been a little bit tight, certainly in the prairies, and I think a little bit better out in central Canada and eastern Canada. But overall, I think we're expecting a little bit of a rebound. Prices are moving in the right direction now, so we'll see what that looks like.